and Zainab. So everyone, we were doing this chapter, rules of debit and credit. Let's just first of all revise everything before proceeding further in this chapter. So until now in this chapter, we have understood the meaning of the account. Then we understood there are two approaches on the basis of which accounts can be classified into different categories. One is the modern accounting approach, then we have the traditional accounting approach. As per modern accounting approach, we have different type of account like asset, liability, expense, revenue, and capital. But as per the traditional accounting approach, we have only two types of account: personal, impersonal, and under impersonal, we have two more categories: real and nominal. Then we did few questions based on the classification of items on the basis of modern accounting approach. After that, we understood the format of the account, wherein I've told you that there are two sides of account, left and right side. Left side is called the debit side, and the right side of the account is called the credit side. Then we understood the various rules of debit and credit relating to the modern accounting approach. So, as per the modern accounting approach, if the account is related to asset, then whenever asset increases, we need to debit the asset account. Whenever asset decreases, we need to credit the asset account. And then in case of liability, when liability increases, credit the liability account, decreases, debit the liability account. For revenue, it is same as the liability. For expenses, it is same as the assets. And in case of capital, the rule is same as for the liability. Then after that, we understood traditional accounting approach, wherein I've told you that nominal account is considered to be an account for all those accounts which are related to loss, expense, and income. All those accounts which are related to asset are real account, and all those accounts which are related to liability is personal account. Okay, and then we understood various rules of debit and credit for the traditional accounting, wherein I've told you that debit, according to for the nominal account, we have a rule which says debit all expenses, credit all gains and income, which means expenses need to be debited and income need to be credited. Real account, for real account, we have a rule which says debit what comes in, credit what goes out. That means whenever asset increases, we need to debit it. Whenever asset decreases, just reduce it, credit it. Then okay, then we prepared, we did few questions wherein we were required to prepare the T-shape account, and we did this question in the last class. I have given you one question for your homework as well. I think this question I gave you for homework, right? I'm sure that all of you must have done this, right, everyone?
Yes, sir.
I gave you this question.
Yes, sir.
Did I give you? Yeah. So this should be the format of the account that you have prepared. This the creditor account should look something like this. You're getting the same values on the debit and credit side. Just tell me, is it the same account that you have prepared?
Yes, sir. Yes, sir.
All right then. Okay, so all right, so let's start our session with this question. In this question also, we are required to prepare the account. This question is saying that, just from the following particulars, prepare the account of D. Buddhiraja. So D. Buddhiraja is the proprietor of a business, right? So if he's a proprietor, then we need to prepare the capital account. If he's a proprietor, we need to prepare the capital account for Buddhiraj. Since he's a proprietor, so we need to prepare just a minute, capital account for Buddhiraja. So these items are given: capital introduced, drawing made by him, further capital introduced, profit for the period 7,500. All right, so let's just quickly start this question. Let's prepare the capital account for Buddhi Raja. So first of all, let me put the heading as all right. So this is the capital account of Buddhi Raja, and on this side, this is the particular side. The left side particulars amount. I'm not making an extra column for the date this time. I have made an account without the column of date. All right, so let's see what are the items given in the question. So it says capital introduced 30,000. First of all, tell me, since capital is being introduced, so tell me whether this will lead to increase in the overall capital of the Buddhi Raja or not. Capital, whenever capital will introduce, how it is going to affect the capital account, whether capital will increase or decrease. Increase or decrease? Increases, right? And I've already told you that whenever capital increases, we need to tell me what do we require to do?
Credit.
Whenever credit it, correct. So capital introduced need to be recorded on the credit side of the capital account. So that means we'll write this here and we'll write it as by, and I'm assuming that Buddhi Raja must have introduced capital by way of cash. So we'll write it as by cash, right? And the amount was, let me check, it was 30,000. Got it, everyone? Is this clear? Yes or no?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Then the next item is drawings made by him. Drawing is going to reduce the capital balance of the proprietor. Yes or no? Yes. This will reduce the capital balance. So ultimately, whenever capital reduces, we need to debit the capital account. That is what the rule regarding the capital says, right? So we'll go to the debit side of the the capital account. Going to the debit side of the capital account, and we'll write down to drawings. Drawings will be recorded on the debit side of the capital account, 6,500. Got it? Is this clear, everyone?
Yes, sir.
Yes, sir.
Okay, coming back to the question, let's read the third adjustment. It says further capital introduced 22,000. Further capital introduced 22,000. So when further capital will be introduced, this is going to increase the overall amount of capital, right? So since the value of the capital is increasing, so we need to credit the capital account as per the modern accounting approach, or either you go with the traditional accounting approach. In both the cases, we need to credit the capital account if further capital is being introduced. So by cash. Just for the reference, I'm writing further capital introduced. And here it was capital introduced. And further capital was introduced 22,000. All right. Coming back to the last item, profit for the period. Now tell me, if firm is generating profit on the capital contribution made by the owner, how does it going to affect the overall capital? Profit, if anybody is able to recall, I think we have covered this point, Laviva. If you are able to recall this, whenever firm generates a profit or business generate a profit, this lead to increase in the amount of capital or reduces the amount of capital. Profit belongs to the proprietor, right? So when firm or the
Sir,
business
it will
generates profit,
increase.
this eventually increases the amount of capital, and hence it should be recorded on the debit side as well. So again, going back to the statement, the account will write down by profit. Of 75, right? And then we will tally both the side. Now you can clearly see on the credit side is greater than the debit side. So let me just find the total value. Just a minute. It will be 30,000 plus 22,000, right? Plus 7,500 minus 6,500. So 59,500 is the total of the credit side. Then we will subtract the debit side item 6,500, and then whatever the amount left after subtracting 6,500 out of 59,500, that will be considered as the closing balance of the capital account, and that need to be recorded this time on the credit side. So this will be considered as since debit side is less than the credit side, debit side is less than the credit side by what amount? Debit side is less than the credit side by 53,000. So this 53,000 will be considered as the closing balance. This is called closing balance of the capital account. Now you will total the debit side, and this time you will get the same value on the debit side as well. So it will be 59,500 as well. Please tell me, everyone, is this point clear? And this question is clear to everyone or not?
Yes, sir, it's clear.
Labiba, Ritika, Zainab, and Vanisha.
Yes, sir.
Yes,
Yes, sir.
Okay, please note this down, everyone. Tell me as soon as you are done, and then we'll move to the next question. Done, everyone? Anybody still writing it? Pratika, Zainab, Labiba, and Vanisha. You guys are writing this?
Sir, I'm done.
Sir, done.
Zainab,
Done, sir.
done. Okay. Then let's start the other question. All right, guys. So I want you to try this question. Let me explain this a little. See, this question says it is same as the previous questions. In this question, it says that we have started a business with 45,000 rupees on 1st of April. Then on 10th of April, the proprietor have withdrew 10,000 for personal use. See, whenever amount is withdrawn for personal purpose, that is considered as a drawing. Amount whenever it is being withdrawn for personal purpose, that is considered as the drawing. Similarly, in the next on November 30 as well, proprietor have paid income tax of rupees 5,000. So income tax is a personal tax, right? Income tax is a personal tax. So amount paid as a tax will also be considered as the drawing only. This will also be considered as the drawing. So any expenses incurred using the business capital, if proprietor is incurring any personal expenditure, if proprietor is using business cash for meeting out his personal expenses, that will be considered as a drawing, right? So on May 10th, the amount which is withdrawn, question specifically tells that it has been withdrawn for personal use, but on November 30, the amount which is amount of 50,000 has been used, has been paid for rupees for income tax. However, the question does not tells you that this is the personal expense, but since it is an income tax, we can we can clearly understand this, that income tax is a personal tax. So personal, whenever income tax is being paid, it is a drawing. Whenever any expenses incurred for personal purpose, that will also be considered as a drawing. All right, then on July 15, we have made a further capital, introduced a further capital of 55,000. And at the end of the year, we have made a profit of 30,000, right? So this one is pretty similar to the previous one. I want all of you to solve this question. I'm giving you 5-7 minutes. Prepare the proprietor's capital account. Done, everyone else?
Done, sir.
All right. I'm waiting for everyone to finish. Please tell me, everybody done?
Done, sir.
Done, okay. So
Yes,
just
sir.
wait for a moment. Let me show you the correct solution of it. And then you can tell your solution with it. Just a minute. Everybody, please tell me how much the closing balance you guys have got. How much is the closing balance? Zainab, please tell me the closing balance you have got. 1 lakh,
One
sorry,
lakh
1 lakh?
15,000.
1 lakh
15,000.
15. Everybody get the same answer? 1 lakh
Yes, sir.
15,000.
Yes, sir.
Ritika, you got the same answer? Okay. So this is the correct solution of the question. This is the format of the proprietor's capital account. Those of you who did not complete it, kindly take the screenshot. And if anyone have any doubt, they can ask me. See, this is the by cash, that the amount by which business have been started. We will record this on the credit side, right? 45,000. Then drawings have been made. So this was the first transaction. Then this was the second transaction. Drawings for personal use have been made for rupees 10,000. Then further capital was introduced for rupees 45,000. Then we have further withdrew for paying the personal income tax, right? So this is drawings. And then we have generated a profit of 30,000. So this is the fifth transaction. And then after that, we can determine the closing balance of the proprietor. And then we will tally both the sides. So both the sides should have the same balance, 1,30,000, 1,30,000. I hope this point is clear, everyone. Now let's do one more question quickly.
Sir,
Yeah.
I have a doubt, sir.
Yes, please.
So should we mention the purpose also, like for buy cash, then you've written started a business. So should we mention that also?
No. I just I've just mentioned it just for the purpose of clarity, so that a student can understand it in a better manner. You don't have to mention it.
Okay, sir.
Okay. Just for the sake of understanding, I've just mentioned it for now. But when we'll do questions and then we need to prepare, we actually need to prepare the capital account or the any kind of account. You don't need to mention the name of the nature of the transaction. Moving on to the next question. Next we have, okay, everyone please prepare the account for this question as well. Open a T-shaped account of debtor. The debtor is bridge. Write the following transaction on the proper side: sale of goods to bridge on credit, cash received from bridge, discount allowed to him, and good returned by bridge. Do it, everyone. Doing, everyone? Anyone is having any problem understanding anything? It is already given in the question that bridge is a debtor, right? So, and debtor is obviously it is an asset. So when you prepare the asset account, you have to keep the rule regarding the asset in mind, that whenever asset increases, we need to debit the asset account. Whenever asset decreases, we need to credit the asset account. This means bridge account will be debited whenever whenever there is increase in the debtor, and bridge account will be credited whenever there is a reduction in the debtor.
So what should we do with the discount allowed?
Discount allowed. So what do you think? What is how discount allowed is going to affect the debtor?
It is going to decrease.
No, discount allowed is a kind of profit for the debtor, right? Isn't it? When we allow a discount to our debtor, it is a kind of profit for the debtor and loss for us. It is, and obviously it is going to reduce the amount of debtor. Let's say, for example, one of our debtor is required to, let's suppose we have sold goods to this debtor for rupees 5,000. At the time of the payment, we have accepted 4,500 from him and given a discount of rupees 500 to him, right? So the discount allowed to him is a profit for the debtor and a loss for us. and obviously since it is a profit, so it is obviously going to reduce the amount of debtor. So if you will ask me how it is going to affect the debtor account, this is obviously going to reduce the overall debtor by 500. So this need to be recorded on the, since the debtor are reducing now because of the discount being allowed, because of the discount being allowed to the debtor, debtor is being reduced, right? Debtor is reducing, and since debtor is reducing, tell me on which side of the debtor account, on which side of the bridge account we need to record this? On the credit side. But the problem is by what name we will be writing it. We'll write this as by profit and loss account. This is a kind of, this is a kind of loss for us, so we'll credit his account by P&L account. Or for the time being, you can also write down by discount. We can also write by discount for the time being. Got it? Is this clear? Do I need to explain it more?
Yes, sir, it's clear, sir.
All right, everyone. So see, let me help you. Sold goods to bridge on credit. When we will sell good to bridge on credit, this is obviously going to increase the amount of debtor. So debtor will increase. Therefore, this amount need to be debited, right? So therefore, we will prepare the, when we will prepare bridge account like this, we will record this amount on the debit side by the name of sales, to sales. We have sold goods to bridge for rupees 25,000. Then cash received from bridge. When bridge will pay cash against the good, this is going to reduce the amount of overall debtor, right? His our debtor will reduce by 10,000, so we need to credit this. Since debtor is reducing, because why debtor is reducing? Because bridge is paying the amount against the goods purchased. So we will record this on the credit side, 10,000 by cash. Got it? So next is, sorry, this one is third, and this is fourth. So discount allowed to him. Discount allowed is going to reduce the debtor again. Reduces the debtor. So on the credit side of the debtor, discount allowed on the credit side 5,000. You can also write it, for the time being, you can write it as discount, right? And then the last item, goods returned by bridge. When goods will be returned by debtor, when goods will be returned by bridge, then it will obviously reduce the amount of debtor. This will reduce the amount of debtor. So therefore, goods return will also be written on the credit side of the bridge account. And after that, we will total the debit side. On the debit side, we will have 25,000, and then we will subtract all these value out of the credit side, 10, 5, and 5, 10,500 and 5,000, and the remaining amount will be considered as the closing balance of the bridge account. And then we will total both the side. We will get the same balance, 25,000 on both the side, debit and credit. Got it, everyone? Anyone having any doubt, please tell me.
Sir, it's clear. I got the right answer.
Got the right answer. Okay, that's great. Anyone having problems? Zainab, Pratika, Vanisha, any doubts?
No,
No,
sir.
sir. Everything's clear.
Everything is clear. Okay. So guys, this is it. With this chapter comes to an end. So this is all about the rules of debit and credit. So we won't be discussing any other question in this chapter. However, I'll be sharing some assignment based on this chapter, and you will have to solve those assignment and submit your assignment as soon as possible. We still have some time left in our session. We still have around 15-16 minutes. So why not, let's just start with a new chapter. Guys, shall we start with a new chapter today?
Yes,
Sir,
sir.
okay, but can we just revise everything from the starting? Like just recalling
Just tell me if
from
you
the
have any
start.
doubt, so I can specifically cover that particular topic. Otherwise, we should start a new chapter, because there is nothing much in this chapter which seems difficult. If anyone is having problem in any specific topic, please tell me so that I can further clarify that topic. Otherwise, I'll share the assignment and the things will get more clear when you will solve few more question yourself. And if you still feel anything difficult, if you find anything difficult while solving the assignment, then we can discuss those questions and problems. I think it would be better then.
Okay, sir. Okay.
All right. Okay, so let's continue. Let's start with a new chapter. Just give me a moment. Let me change the PowerPoint. Just a minute. All right, everyone. So we are starting this chapter. Vanisha, Laviva, Ritika, and Janab. The name of this chapter is Cash Book. This is, as per our syllabus, this is our fourth chapter. Prior to this, we have covered chapters such as the first chapter that we discussed. I was teaching you about the basic concept of account. Like in that chapter, we have understood the meaning of the account, various terminologies of account like asset, liability, revenue, capital, all these things. And then we have started our second chapter that was related to the accounting equation. And third chapter that we were doing was rules of debit and credit that we just finished. So now we are starting a new chapter, which is cash book, right? So first of all, as usual, first of all, we will try to understand the meaning of the cash book, right, everyone? So I want everyone to put this heading in your notebook. The since we have started a new chapter now, so you can put this as the heading. Name of the chapter is cash book, and we will try to understand the meaning of the cash book. So first of all, what is a cash book? Give me a moment. All right, so what is cash book? See, everyone, cash book can be defined, you can define it as a financial journal, right? It is a financial, just a minute. It is a, we define it as a financial journal that records the financial journal that contains or records the transactions relating to cash. So all transactions which are, just a minute. So all transaction that leads to the inflow and outflow of cash, all the transaction which lead to the inflow and outflow of cash throughout the year. So all the transaction taking place in a business organization throughout the year, which are related to the cash. So all those transactions which are leading to the inflow of cash and outflow of cash that required to be recorded at one place, which is called cash book. So cash book, you can say, is a book that records the cash related transactions only. It contains the inflow and outflow of cash. This is it. Now we have two types of cash book. One is called the single column cash book, and then we have this double column cash book. So if we classify the cash book, we have two types of cash book. Just a moment. You don't have to write anything down as of now. Just understand everything, and then I'll give you separate time for writing this down. So cash book are of two types. One is the single column. and double column cash book. So there are two types of cash book, single column and double column. So single column cash book is also known as simple cash book, right? This is also called simple cash book, and double column, obviously this is also called two column cash book. So what is the speciality about the single column cash book? What is the special feature of single column cash book is that it record only cash transaction, right? But when it comes to the uh, double column cash book, it is the characteristic of double column cash book is that it records the transaction relating to cash, but it also records the transaction relating to bank. So single column cash book deals with only cash transaction. But special thing about the double column cash book is that it record the cash transaction as well as the bank transactions. So the book that record the cash and bank transaction at one place, that is called double column cash book. And then we have single column cash book that record the cash related transaction only. So this is the basic difference between the single and double column cash book. All right. As I've told you that cash book is nothing but a financial journal that record the inflow and outflow of cash. So you just have to understand the format of the how do we prepare the cash book. When we need to prepare single column cash book, this is how it is prepared. The format of the single column cash book is something like this. It is almost similar to the account. Let me show you. We'll put the heading as cash book. This is the format of the cash book. You don't have to write anything. Then we will make a column for the date, right? Date. After that, a column for particulars. Then an extra column this time for ledger folio. This is in short, this is called LF, ledger folio. And then column for amount, right? And this is considered as the debit side. This is the left side of the cash book. This is the left side of the cash book. On the right side of the cash book, again we need to write down the date. After a column for date, we make a column for the particulars, then an extra column for ledger folio, and then finally one column for is happening. And then a column for amount. All right, everyone. So something like this is the format of the cash book. This is considered as the debit side, and this is our credit side. Got it, everyone? Is this clear? And now see, on the credit side, what do we record? Cash book. On the credit side of the cash book, record all the inflows. All the inflows are recorded on the credit side, and all the outflows are recorded on the debit side. So any transaction that leads to the inflow of cash will be credited on the debit side, and if there is outflow of cash, that will be recorded on the debit side. I hope this point is clear, everyone.
Sir,
Yes, please. Sir.
shouldn't debit be on the left side?
Oh, I'm sorry. Right side is obviously it is the debit side. debit side. Sorry, the left side is the debit side and the right side is the credit side, as usual. Debit and credit. So all the transaction leading to the inflow of cash are debited and all the outflow of cash are credited to the cash book. This is the format of the cash book. Got it, everyone? Is this clear? All of you? Anybody is having problem understanding anything? Okay, let
It's
me
clear,
give
sir.
you quick recap. Whatever I have told you. See, cash book, when it comes to the definition. Just a minute. Okay, so cash book can be defined as the financial journal which contains the cash receipt and disbursement. Disbursement basically means payments. So all the transactions that involves the receipt and payment of the cash are recorded in the cash book. This is it. Now, as I told you, cash book are of two types: single column and double column. Single column is also known as simple cash book, and double column is also called two column cash book. Single column cash book record only cash related transaction, right? Cash related transactions, whereas the double column cash book record not only cash transaction as well as it also record bank transaction. So therefore we make an extra column for recording the bank transaction. Two columns are made in the double column cash book. One is for the cash, recording the cash transaction, and the other one is for recording the bank transaction. This is how the format of the single column cash book looks like, right? So this is the format, or this is the debit side, this is the credit side, and this is left side and right side. On the left side we need to record the inflow of cash, and on the right side we will be recording the outflow of cash. I hope this point is clear, everyone. All of you, is it clear?
Yes, sir.
All right, everyone. So I want all of you to note this down quickly, and if anyone have any doubt, please tell me.
So when will you take journal lesson?
Yes, please. Ratika, you are asking something?
Yes, sir. When will you take the journal chapter?
Journal, just a minute, let me check. Journal is the 6th chapter. So we'll be able to start the journal after covering the cash book and the subsidiary book. So this will take some time. Since it is the 6th chapter, so we need to cover the 4th and 5th chapter. First of all, we'll cover the cash book, then we will cover the subsidiary book, and then we will start with the journal. Is it okay? Do you want to start with the journals?
Yes, sir. Because in school
Yes, sir.
we have exams coming up.
So in that exam, cash book must be coming in, na?
No, sir.
Cash book is not there in your exams.
No, sir.
Labiba
No,
mentioned
sir.
it.
Only till journal.
Only till journal. Okay.
Yes,
So
we have
see, usually it gets easier to understand the journal entry when we cover these small chapter, na, these basic chapter. Anyways, if all of you are willing to start with the journal, we can start the journal entries as well from the next class onwards. And if you want me to start the journal, then you don't have to write anything in the cash book as of now, right? We'll end this session here only, and from the next class onward we will start a new chapter that will be journal entry, if everybody agrees upon that. Labiba, Zainab, both of you are okay with that if we start the journal?
Yes, sir.
Zainab,
Yes.
any? Okay. All right then. So all right. So leave it here. Cash. We will be continuing the cash book after completing the journal. So all right then. So let's start journal entry from the next class onward. Since the time is up already, we'll only be able to start this chapter from the next class onward. Okay. All right, Ritika. So thank you so much, everyone. This is it for today's session. We'll see you in the next class. Till then, take care. And